wondered how you could have invested in future giants like Netflix, Tesla, or Google without the stress of analyzing them? What if I told you there's a way to invest in a basket of these future stars and ride their growth wave with less risk? Hello everyone, this is CH Shrishti Gosavi, and today we are diving into IPO ETFs, your ticket to accessing new high growth companies while keeping risk in check. So, what exactly is an IPO ETF? An IPO ETF, or Initial Public Offering Exchange Traded Fund, invests in a diversified basket of stocks from companies that have recently floated their IPO and gone public. This means you get to tap into the potential of these new companies without having to pick individual winners. But why should you consider these? First up, diversification. Investing in an IPO ETF spreads your risk across multiple newly listed companies. Instead of putting all your eggs in one basket, you get a slice of many new ventures. Next, IPO ETFs can offer access to high growth companies. Professional management is another advantage. IPO ETFs are managed by professionals who carefully select which new IPOs to include in the fund. You benefit from their expertise, saving the grunt research work. Lastly, IPO ETFs offer liquidity and flexibility. Like other ETFs, they can be bought and sold on the stock exchange just like individual stocks, making them a flexible option for investors who want easy access to their investments. However, it's not all sunshine and rainbows. IPO ETFs may also have drawbacks. A major drawback is volatility. Newly listed companies may have higher volatility. The stock prices may swing widely, leading to higher risk. Think about the recent IPOs of companies like the one of a major food delivery company and the other of a major payment wallet company. Both of them saw significant price fluctuations post-IPO. IPOs have minimum investment required. This is determined by the minimum number of shares that you need to apply in an IPO. By investing in an IPO ETF, you can get exposure to companies that have recently come out with their IPOs without having to meet the minimum investment required. To sum it up, IPO ETFs offer a way to invest in a diversified portfolio of newly public companies, giving you access to high growth opportunities with professional management. However, be mindful of the potential volatility and costs involved. So, that was all for today's video. Hope you have understood IPO ETFs. I'll see you in another video.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.